Joining us now to talk more about battling higher inflation is someone who was at yesterday's banking committee hearing, Tennessee Republican Senator Bill Hagerty. He's also a former board member of the NASDAQ and the New York Stock Exchange. Yesterday, just to start off talking to you, Senator, someone said, really, what are those tools? There's only one tool, and that's tighter monetary policy, which it hasn't even, that subject has barely been, they don't even talk about that. There's a plan to have a plan to talk about it down the road. So what tools are your fears allayed by Jay Powell? What tools is he talking about?
Well, I think they're going to meet at the end of this month. They've got to talk about further balance sheet expansion, which has actually been a great enabler of massive stimulus spending, and also rates. I think he's got a longer-term view on rates, as he indicated. I really encouraged him to look hard at what's happening, though, in the real economy. If you take a look at what's happening right in my home state of Tennessee, try to buy a house in Nashville right now. The home prices are up through the roof. This isn't transitory. There are transitory components of it, certainly having to do with supply chain dislocations, but they talk as though this is some sort of pig in the python moment. What you see, though, are inherently inflationary policies coming out of the Biden administration right now. From day one, they came in and canceled the Keystone XL pipeline. They forbade drilling on federal property. What that does is it raises our cost of energy. Everything that people in Tennessee have to buy needs to be transported. People drive to their jobs. People are feeling inflationary components of this throughout. And then when you have massive stimulus spending underway at a time that our economy is improving, you've really got to take a very hard look at the long-term impact of this. And I think that what we're seeing is an increase in government dependency, subsidization of unemployment, which makes Chairman Powell's job very difficult on the unemployment mandate. So we really need to be focused on inflation. That's an insidious tax that's being imposed on every American. I'm very concerned about it, and I think Chairman Powell acknowledged that too.
We've been having this conversation all week, and as you've got obviously some great experience in the financial markets with the NASDAQ and the New York Stock Exchange. And our question was, we've already done a lot in terms of monetary policy. We know that. And you're right, in terms of fiscal policy, we forget we've done quite a bit of stimulus in the middle of the pandemic, and now we're talking about, logarithmically more or exponentially. Yeah. I think that's the inverse. Exponentially more. Could inflation go up based on the prospects for this happening? Because are you convinced we're going to get another $3 trillion? Are you convinced any of that is ever going to become law at this point, Senator?
Well, as you know, inflation can be a self-fulfilling prophecy.
Okay.
It all has to do with expectations. And I think people in my home state, I think people across America are feeling this. If they look at things that they buy every day, they're more expensive tomorrow than they're going to be today. It's creating a sense of panic as people make long-term business decisions, medium-term business decisions, as families make their own decisions. So I am concerned about inflation becoming a very, very real concern. And as I said, an insidious tax and more stimulus spending only increases that.
I guess I was asking you as a senator to handicap, do we do the 10 Republicans that did this bipartisan, they had that agreement, does that go through at 600? And then through reconciliation, do they do another, whatever it is, or is it 800? It comes up to 4.1 trillion. Is that going to happen?
It's going to be a massive number.
And what would that mean? What would that mean if we did 4 trillion? What would inflation be a year from now if we did that?
Well, we saw what happened in March. In March, a $1.9 trillion package, that's roughly 10% of our GDP that they want to dump right into the economy at a time that our economy is rebounding. Now they're talking about doubling that number at least. 20% of our GDP at a point when we just had month over month, if you annualize from May to June, that's a 12% inflation increase. We haven't seen the likes of this sort of inflation since Jimmy Carter's days. Now, I get what Chairman Powell is saying long term. They want to see us at a 2% inflation target. We've way overshot that.
Shepard Smith here. Thanks for watching CNBC on YouTube.